Alright guys, welcome to this lesson on multiple candlestick pattern trading. And some things you need to take note of is that you gotta look at the candles before and after the formation, and multiple candlestick signals are stronger than single candlestick signals under the same context. Okay, the context is very important. You can see that this part I've highlighted. So different candlestick at different locations tell you different signals. For example, this patterns over here tell you that the trend is going to end. How do you know? If you see consecutive 3 red candles and then followed by a small bullish candle, this is actually an indication that the trend is going to end. You know that when price makes a 90-degree fall just like that, the sellers want to sell would have already sold, and hence price would become overextended, and the reversal is further confirmed by the fact that the next candle is a bullish, small bullish candlestick. This is a strong indication that the reversal is going to come soon. And the size of the candlesticks also tell you a lot of things. So for example, if you see at the end of the trend, the candlesticks become smaller and smaller and smaller and smaller like this, it actually tells you that the bullish momentum is ending. So you don't have to look at specific candlesticks over here, just look at the size, the overall larger context. Candlesticks went from, pretty an average large size to small and small and smaller and smaller over here. So if you see this kind of thing, you gotta take note and take it as a warning, because the bullish trend might just end from there. And in this case, yes it did, okay? The bullish trend ended and your 50 start to cross below 100. So you can see that price is always a leading indicator. And again, you see almost a 90-degree free fall. You can see 3 consecutive bearish candles, then followed by a bullish candle. And the candles over here, they're starting to get smaller and smaller and smaller and smaller and smaller. CCI also gave you oversold signal, so you better start to get up from here. Okay, this is a sign that the bearish candle is about to end. Yes, you see small candles over here, but do you see a 90-degree free fall like this? No, not really. And the thing is, candlesticks also can show you where the retracement is going to start. Okay, as you already know, downtrends don't move down in a straight line. It will retrace back up, come back down, retrace back up. Now you can see over here, the candles are getting bigger and bigger and bigger. And when you see consecutive red candles, it goes for 1, 2, 3, 4, 5, and then suddenly a bullish candle comes out of nowhere after so many consecutive red candles, especially at the beginning of the trend. This is actually a sign that a retracement is going to come. Again, you see over here, consecutive red candles, then all of a sudden green candle come. You see what happened to the price afterward? Retracement. So you can in a way look at what's happening previously to determine when the retracement is going to come. Okay, now here's an uptrend over here. Alright, you see consecutive green candles, suddenly red candle, and the price retrace. And most importantly, you see CCI went to overbought. Consecutive red candles, and in this case it tests the 50 SMA. Then all of a sudden green candle, then you know that high chance the price is going to bounce off from here. So it pays to look at what is happening before your entry to give you more clues as to what is going to happen to the price afterwards. Of course, it doesn't happen all the time, because no strategy in this world is 100% perfect. It doesn't tell you how far the retracement is going to go, because you can see consecutive bullish candles over here, then all of a sudden a bearish candle, but the price retraces a little bit just like that, right, before it continues to go up. That's why you need a lot more other indicators. But you know, one important thing you need to take note is that don't use this to trade against the trend, because for example, you see consecutive bullish candles over here and then you see a red candle, don't go and sell, okay, in anticipation of a reversal, because in this way you're trading against the trend. This is an uptrend over here. For example, you see over here consecutive green candle, I think 1, 2, 3, 4, 5, 6, 7, 8 consecutive green candles. And if you try to sell here, it's not going to work out so well. You're trading against the trend, the price retraces a little bit only, and then it continues to go up. Of course, once your model is going to work out for you, you see consecutive green candles, 1, 2, 3, then all of a sudden red candle. If you sell here, you might get a little bit profit over here, but I personally wouldn't recommend you to trade against the trend. Understand what I'm saying? What I want you to do is to look for buy trades. For example, if you see consecutive red candles, 1, 2, 3, 4, 5, 6, 7, then all of a sudden green candle. If it is laying on a support zone, okay, or a support line, in this case, if I drew this, you can see that it is resting on a resistance zone which turned to support zone. Then this is a good place to buy, even though I prefer the price to come down to a moving average because it's still a bit too far away from moving average. But you get my point, okay? Buy only when price retraces back down, rather than trying to sell here, and sell here. Alright, so with that, I hope that this gives you a clear idea on how to trade candlesticks on a bigger context rather than looking at individual candlesticks alone. Very important to look at the bigger picture, okay, to increase your probability. Alright, so with that, I'll talk to you in the next lesson. Bye.